Hey everybody, Jason here today. Happy Thursday. Hope you guys are all having a great day. So started off the day okay, and then we had some news about bombs going off around the Afghanistan airport, and we saw that huge drop. And we not only saw it there, we saw it with the spy. We saw it pretty much all across the board, and I think that's all that's pretty much driving the market down. We do have Jackson Hole coming up starting on Friday, goes through the weekend, so we should see some effects from that on Monday, most likely. So, a couple things. I want to give you guys a couple ideas of how to play that if you are worried about the downside. I get asked every once in a while, like, "What are you doing? what what are you doing? I hear that the market should be crashing." So, if you're worried about that, there's obvious things like buying a put on the SPY, buying a put on the Qs. You can do that. But there are a couple other funds that you can use and a couple other ways to play it. And just wanted to give a couple ideas. So, one of them here is UVXY. UVXY is an ETF that where we can play volatility. So not necessarily or not on any specific underlying, just the market as a whole. When volatility goes up, so does this fund. So you can see how this correlated with the market going down. We had a huge spike here, and we can have some pretty good spikes. This is a leveraged, I guess it says it right up here, leveraged volatility linked ETF, but you can see some pretty major spikes that happen pretty quickly. So within from a Friday here to a Monday, you can see that's a pretty good gain there. So this, if you're worried about the downside on the market or things just going crazy, this is a fund that you can either buy the shares, which is fine. You're still pretty leveraged there, or you can grab, for example, next week you could grab some calls on this. You can see they're already up 40 some percent pretty much across the board today with today's move. The next one I want to take a look at is TLT. And TLT is bonds. So you can go back and look at this. So when we were first kind of getting into the pandemic here, we can see how much those really spiked up. And the reason for that is because bonds traditionally are relatively safe. They don't give you a whole lot of, they don't give you a whole lot back on your money, but they are safer compared to, stocks and things. So when money is coming out of the market, so we saw everything sell off, people can either put the money into cash, they could put it into gold or bonds. And that's where a lot of the money went. So you can see it spiked up, a ton of money went into bonds. And then as the market was going back up and recovering, the bonds came way back down. So you'll be able to watch this correlate, typically going up, either as we get news about interest rates or we get down days on the indexes like we did today. So that is another idea. The next one I wanted to look at was just some of the short funds. So this is again another leveraged ETF, and these basically play inverse of the Qs. So as the Qs go down, this fund will go up. Grabbed a few of these just for next week. Relatively cheap, $9 a piece. But if we happen to get some bad news tomorrow, and then over the weekend, these could go up quite a bit. But this is all these plays and everything I'm talking about. They're pretty much YOLO. They're low, depending on where you're buying them. They're pretty low probability of being profitable on them. However, they're the ones that are, they're really good protection. So not an income strat, not something that you should use all the time. But if you can catch a piece of news very early, right before, a huge dip, those are a few ways that you could play it. Now, the other thing I wanted to look at is Optionstrat. So if you guys don't have this, and let's grab, we're gonna pop into Optionstrat right here. If you guys don't have this, really you should. You can see you can enter, any stock over here, and then there's a whole list of strategies, anything from novice, intermediate to advanced. And expert. So there's a ton of different things that we can see in here. So, for example, want to look at a calendar spread. It'll give you the strike prices. Up here, you can adjust the expiration dates, and you can see how that affects the chart of profit or loss depending on time and the underlying price. And one of them that I wanted to look at, and I still use this thing. This is fantastic for seeing where you're at. And by the way, when somebody was asking about a calendar, this is pretty much what you get out of a calendar spread. You get pretty much an island of profit, and you can see it gets pretty decently wide to where you can take profit, and then those last couple days you can gain majorly, but it does kind of narrow on that. And you can look at it from this standpoint. They also do have a graph. This is what you would normally see just presented as what would it look like upon expiration. But the nice thing that you can do is this slider here, you can drag it through time. So you can see you open it up initially, you have any movement, and you're not going to have profit, but as time goes on, that width increases. Your maximum profitability isn't all that high, and as we get closer to the actual expiration, you have 1 point up here that is your maximum profitability, and then anything for a little further out, that is where you start to make less money or potentially lose, and you can see that. So this is a super good tool. I use it pretty often. And you can also, let's see, you can grab that table here, and then you can start like messing with things too. So you can see how all the strike prices would just kind of affect that island. And you can also see how that changes, how much you're going to pay, your max loss and profit. I know you can pay for this, and you can get a probability of profit right here. So there's some other features that you unlock, but I just kind of use it for that island thing. So what I wanted to do actually is I want to open up a long call butterfly, and this is one that I'm going to play. So the only thing, let's see, yeah, long call butterfly. So the only thing I want to be able to do is I'm probably going to want to pay a little bit less for this, but I don't want any of my profitability really down here. I'm not worried about the 650s down there, and if we do have it, it should be for the relatively like short term. So I want that downside to be around maybe 685 or so. So what I'm going to do is I'm going to start dragging these up. So we can see we're starting off with a 343 debit. That's what this would cost us. And so we're going to just drag these guys up. And a little bit wider here. I think this is, let me see, 20. So now you can see this is just a $205 play. Our max profit isn't that much, but it kind of puts me right where I want to be, where I'm not going to really even lose. I'm not going to lose very much until I'm down around 685s, and that's kind of barely. I don't see us dropping back down to the 640s or 650s, but if we take our profit even, or close this even in kind of in the middle of things, we can still close it. We're not losing too much, but again, maximum risk here is $205. We could also look at a few different dates here. And the other thing I want to take a look at, I'm going to convert this chart over into profit and loss and see. So right around the 17th at this point, this is where the island of profitability gets pretty large. So we should be able to take a 30% profit on this play around the 17th, and 17th, or if things go right, yeah, the 13th. So what I'll probably do is go ahead and enter this and look for a 30% profit on it. So we can jump back over into Robinhood, and we'll just take a note of a few things here. The date, October 1st, and our strike. Oh, hey, there's someone at my front door. Cool. And the strike price is here, and we expect to pay around $175 for this play. All right, so now we're gonna find Tesla, and we are going to go ahead and trade this. So October 1st, and in this instance, we are going to buy a 720, sell 740s, and buy 760. All right, so hit our little up arrow here, edit ratio. On these long butterflies, we do need to sell two of the ones in the middle. Hey, well, we did make a big mistake here. We are doing puts. We're not trying to do puts. So we'll clear that out, flip over to that. That was a easy mistake to make. All right, so 720, 760, and sell the 740s. All right, now edit ratio. We'll have two of the ones in the middle that we're selling. Hit continue. We can see it's right around our projected 175. Of course, the market does move, and then we can see what this little chart looks like. You can see it's pretty much the same as the other one, but they only give us this chart. This is just on expiration date. So on expiration date, we would have to be at 720 and or above 720, below 758, and right in the middle we could potentially gain $1,800 on this play. But like I showed you, that island of profitability really kind of maximizes and then it starts squeezing down. So we can pay a little bit of attention to the price action between now and then, but we really don't have loss come the 17th or so if we're closing this at around 30%. So we'll go grab, they're gonna charge us more. Yeah, we'll pay 185. So let's grab a couple of these. Why not? A couple of butterflies. There we go, got filled, 364. And then what I'm gonna do, I'm gonna go find it. That was October. There we go. So they're just going to come up as 3 option strategy. It doesn't really name them when we're doing butterflies for some reason. Although I think they could write the software to be able to do that. And then what I want to look for is that about 30% up on this, which is going to be about 234. So we'll put a closing order at 240. So we'll hit close, 2 of those at 240. Go up to this little gear up here, hit that. Good till canceled. And that is it. So when we collect 30%, a little bit higher, this will automatically close. We can obviously go back and modify that order if we want to, but now I don't really need to think about it. If we happen to hit that amount of profitability, then we're just good to go. All right, guys, if you have any questions or anything, please let me know and I'll do my best to explain. Closing the video down about 3,035. We'll call it down $4,000 today. All right, love you guys, and let's make a lot of money.